All right, we got a Vanguard Total Stock Market Index Fund. It's an ETF. One of the solid ones. What do you think, Sean?
Yeah, I really like this ETF. This is one of the ones I got into. And it was tough because obviously I think we're expecting equities to go down. So I've been holding and just trying to get my average price down. It's a exchange traded ETF, exchange traded fund that has large cap and small cap companies. The three biggest companies it holds are Microsoft, Apple, and Amazon. And that makes up about 30% of the fund. But the rest of it spans the entire, spectrum of small to large cap.
Yeah.
As well.
I'm a fan of these. I know I mentioned it last week. I'm a fan of solid ETFs. Vanguard is one of those solid ones. They have another one as well.
VOO.
Yeah, exactly. These are like say your company doesn't offer a 401k or something like that, or something similar to that. I mean, there are benefits for 401k. Everybody says the tax purposes, but then eventually you end up paying the taxes anyway. So, but if you're not buying stocks, if you don't have a 401k and you want to get into the stock market, or if you want to, like, I don't want to say pretend because you're actually in there, but these are solid ones. Like,
yeah,
it's something like, say you're just parking, $100 a month. Say just doing that for 10, 20 years. You're not going to be angry at the end result. As a matter of fact, you start getting a little confident in like year 5, year 10, a pumping just plan. This could be your plan D. Like, say plan A doesn't work out, or just combine all your plans, right? And I think that's what they mean when you diversify. Like,
well, this does the diversification for you.
Exactly.
So that's the point behind it.
And if you're this is essentially like you're diversifying within your diversifying.
Correct.
Like, and I would even almost consider it like just being out of the stock market completely. And I would almost equate it as like you got your regular stocks, your non-blue chip stocks, your growth stocks. You got some blue chip, and those are like your real stocks, right? And then you got like your real estate portfolio, and again, it could be something small, your real estate portfolio, whatever it can be. Like, nobody should ever judge any size like, oh, that's a small one. It's like, because there's always going to be somebody bigger than you. So I don't think anybody should ever feel ashamed or whatever, however big their real estate portfolio is. And this one right here could be something else on the side.
Yeah.
So it'd be like I said, like the third or fourth option, and then so you're just parking some money here in case naturally if the other stocks tank, then this one tanks as well, as we've seen.
Well, it tracks the Dow basically. So when times are tough, it's supposed to track with the major indices. It's it's not going to do worse, and in many years it does outperform the S&P and the Dow. So this is a really good option. Personally, I'm going to keep scooping up more of it, just trying to get my price point down. Big picture real quick though. One of the reasons why everyone thinks we're seeing like a correction and we're going to continue to see that, Warren Buffett recently has often compared interest rates to gravity. In other words, the price of equities is going to be weighed down by the interest rates. There's only so high it can go because gravity's pulling it back down to earth. And that's kind of what we're going through right now as the as the interest rates increase and equities are coming down. But that presents a good buying opportunity. And if you're not throwing it all in one time, but dollar cost averaging it out, I mean, this is the kind of stock you could get and just forget it. Set it and forget it. You throw in $300 a month or whatever.
Yeah.
And, it's doing the diversification for you. And by the way, they do charge a small fee for managing the fund, but it's really low. It's 0.03%. So the expense ratio is really low.
But that's part of like a business, right? Like,
so, but you're averaging, if you're dollar cost averaging
Yeah.
Vanguard, this VTI, you're diversifying your portfolio and you're averaging and diversifying the price point. So it's really, that would be my recommendation if you're going to get this, which I intend to, as I think the price will come down lower.
yeah, you can't go wrong with this one. This is, again, is as if you're just want to be a little more conservative, but you also want to be like an overall investor, and complain with the rest of us when we have, bad days in the market. You're like, yeah, I know, I have a couple of $100 in my Vanguard and it's just tanking.
The problem is you're not picking stocks with this. People are doing it for you, and it's not as exciting. That's the problem. Like, we obviously like this stuff. Otherwise, we wouldn't be talking about it.
Yeah.
We're interested. We want to pick stocks.
Yeah.
But the problem is this is probably the smartest thing you can do.
Yeah. I mean, personally, you have your own fund. I have my own fund.
And I love looking at the numbers, what's the PE ratio, PS ratio, what are the earnings, the top line versus the bottom line. I want to look at all that. But the thing is, I don't need to. I could just buy this, and the work is done for you. You're diversified immediately. Just average your costs down and throw in however much you can afford every month. Yeah. And forget it. And you don't have to do any of this investing work at all. Yeah. We do it because we like it, but maybe some people don't. And honestly, they'll probably do better than a lot of people who pick stocks if they just throw their money into this one or two ETFs.
Yeah. It is part of like the getting older phase, I think. This is definitely not attractive to 20-year-olds, although it should be.
Yeah, I mean, they're the ones that are going to benefit it from the most,
exactly,
because of the time value of that money that they have in there. But yeah, that's the other thing too, is like 2020, everyone remembers. So this is the hard part. A lot of new investors came about as a result of the pandemic. We see a lot more people involved in the market, which is great, but it led to volatility. And now we're coming out of that. And I mean, I'm sure everyone has that one or two or three stocks or cryptos they had that just took off and they made money on it. And most of the time, it's not going to be like that in the market. Most of the time, you're not going to just have something just blowing up and going to the moon and making you a bunch of money in 3 hours. That's the exception, not the rule. And now, as we get interest rates up and equities are weighed down by that, you got to come up with a strategy to actually have earnings in the long run. And I think you're right. The time value of something like this, it just makes sense.
Yeah. Not your, well, for us at least, not our entire portfolio. But
no,
just
not the entire.
Something to where you could even just like base it on your amount of pizza consumption, like if you like pizza.
Yeah.
Or movies, just equated to that. Like however much money you spend on movies and pizza a month, just use that money. Not I mean, everybody deserves to have a little fun, but I'm saying that is the same amount of money, just place it over here. So if you spend $100 on movies and pizza, or $200, do the same over here. So that way, that way you're at least saying, like, hey, you know what? I'm having a little fun too, but I'm also investing. Like whatever.
Yeah, and if you're not a big investor, you're not really into it, or you are, this is for you. I think this is the way to go personally. And I like picking stocks, but this just makes sense. Get your price point down, your average price, dollar cost average it, and then you're already diversified. They don't charge you a lot of money to do it.
Yeah. I mean, this could easily be 1,000.
Not anytime soon.
Not anytime soon, but just as perspective. Like, let's just say you're buying 5 of these a year. At this price point, like especially for the next 2 or 3 years, when it may be hovering around this price point because of the economy. And let's just say you bought 15, so it's like nice little 15K when it gets to 1,000. And obviously you're buying more as the years come, but just so you guys a little perspective of that power that this can have in saving money and investing in it somewhat conservatively.
Yeah, and for me personally, because I do like picking stocks, frankly, this one in particular, this VTI, I really like this thing, and I want this to be the bulk of my portfolio. But because I still like picking stocks, I'm still going to do that too. I'm not going to do everything in this or any one ETF. but I would like my vision of what I'm trying to build is going to be, this is going to be a good foundation. This VTI, among a couple other, there's some small cap ETFs that we may look at explore at some point, but I really like this one. And yeah, if I had $1,000, yeah, I'm not only would I, I'm
Buying
going,
five of these.
I'm going to
So
continue to buy them. What about you?
yeah, this is just like a recent epiphany that I had because I've seen so many stocks just get banged from November of last year till now, including
Yeah.
the ones that are under this umbrella. So you have to. I think you have to almost. I mean, yeah, you have to in case we're not the smartest guy in the world.
Yeah.